Buyer demand has increased across all metro areas during this period, reflecting a recovery from previous reports. Activity has picked up in both core regions and suburban or outlying areas, signaling broader market improvement. This surge in demand suggests a rebound, likely fueled by enhanced affordability and better market conditions. The overall momentum has strengthened, with renewed interest across all regions, indicating that inventory shortages are still impacting trends but are less restrictive compared to earlier periods. Demand has increased across all home segments in the Washington metro area. Luxury condos saw the most significant increase, rising from 74 to 111, likely driven by a surge in buyer interest for high-end properties. Entry-level condos followed, climbing from 67 to 86. Townhouses rose from 53 to 64, while luxury single-family homes increased from 40 to 60. Mid-market homes rose from 51 to 59, and entry-level single-family homes saw a rise from 51 to 59. This broad uptick signals a market recovery, with the most notable increases in luxury condos and entry-level condos. The entry-level single-family home index now stands at 59, up from last month's 51, but down from last year's 66. This shift indicates a moderate increase in buyer activity compared to the previous month, yet it remains below last year's levels. The steady demand in this segment, along with constrained inventory, continues to fuel competitive market conditions. Despite broader market fluctuations, buyer interest remains resilient in the entry-level single-family home sector. The index for mid-range single-family homes is 51, up from last month's 39, but slightly down from last year's 52. This increase from last month signals a modest rebound in buyer interest, although demand is still below last year's level. Despite the slight improvement, limited inventory in this segment continues to restrict market activity, resulting in relatively weak competition for mid-range homes. The market shows signs of recovery, but inventory constraints persist as a key factor limiting broader demand. The index for luxury single-family homes is 60, up from last month's 40, but slightly down from last year's 69. This increase from last month indicates a rebound in buyer interest, yet demand remains lower than last year's levels. The decline compared to the previous year suggests that the luxury home segment is still facing challenges, possibly due to affordability constraints or shifting market conditions. The entry-level condo index stands at 86, up from last month's 67, and an increase from last year's 82. This demand reflects sustained buyer interest in affordable condos, showing improvement from last year. Although there was a slight softening from the previous month, the year-over-year increase highlights the continued resilience of the entry-level condo market. Despite broader economic fluctuations, this segment remains a stable option for buyers seeking affordability. The luxury condo index stands at 111, showing a significant increase from last month's 74 and a modest rise from last year's 98. This notable month-over-month growth indicates a positive shift in the demand for luxury condos, signaling renewed interest in this segment. The year-over-year growth further supports a strengthening market, suggesting that despite the economic challenges, buyer interest in luxury condos is increasing, reflecting a recovery and stabilization in the market. The index for townhouses, row houses, and twins stands at 64 for this report period, up from last month's 53 and slightly above last year's 63. Despite this increase, buyer interest remains relatively limited, reflecting broader market softness. While the month-over-month gain suggests some positive movement, inventory remains low, which may continue to constrain buyer activity.